Stagflation is looming in India. The economy is grinding towards its slowest economic growth in more than a decade. And to make matters worse, inflation has now spiked at its highest levels that we've seen in more than 5 years, boosted by a surge in food prices there. Radhika Bajaj has more from Mumbai.
Retail inflation has come in at 7.35%, and that adds to the many economic challenges that are being faced right now by the Narendra Modi-led Indian government. In November, retail inflation was at 5.54%, and in October, it was 4.62%. The December rate of 7.35% is actually the highest since 2014. The high inflation rate comes on the back of soaring food prices. Food inflation stands at 14.12% in December, as against 10% in November. Vegetable inflation has crossed 60% in December. A large contributor to this are onion prices, a staple in Indian cooking that in recent months have cost up to 5 times more than their usual price. The high inflation figure has surpassed the Indian Central Bank's upper end inflation target of 6%. Economists say that this could mean no monetary easing by the central bank, given in December too it had held off lowering rates, citing higher inflation. This in turn puts up a huge challenge for the federal government that's been looking for ways to revive a slumping economy. India is projected to grow at an 11-year low rate of 5% in the financial year that ends on 31st March 2020. Finance Minister Nirmala Sitharaman will be presenting the budget for the financial year 2020-2021 on February 1st, and the Finance Minister is widely expected to increase infrastructure spending as well as cut tax rates, and some economists fear that that will further stoke inflation. Now, economists also say that the Monetary Policy Committee's meeting scheduled for after the budget will be the one to watch, because the bank will try to curb inflationary pressures amidst the slowest economic environment it's seen in over a decade.